Hello everyone, welcome to JAIIB CIB Prep. In today's video, we're going to discuss about unit number 10, foreign currency accounts for resident and other aspects. So in this particular unit, we'll discuss about the type of accounts permitted for the residents, be it EEFC account, RFC account, RFCD account, DD account, and what are the permitted foreign currency accounts outside India. We'll understand about modes of acquiring property outside India by a resident and Foreign Contribution Regulation Act of 2010. We'll understand about it. We'll do some practice questions and wind up this unit. So let's start. Uh, People living in India, they also need to deal with foreign currency sometimes, like US dollar, euros, and this can be for business or personal use. But again, holding a foreign currency account in India is not completely free. It is regulated by FEMA, Foreign Exchange Management Act. Earlier, such accounts were not allowed easily, but now FEMA has relaxed rules to help people who often earn or spend in foreign currency, like exporters, freelancers, consultants, etc. Uh, why is this helpful? Let's say a person earns in dollar but lives in India. Every time they convert dollars to rupees, they lose money in currency exchange and pay bank fees. Now, if they can keep money in dollars, they can avoid that hassle. Also, if they spend in foreign currency, uh, having a foreign currency account acts like a natural protection against currency rate fluctuations. Now, what are the types of accounts permitted? So, we'll understand about four types. EFC exchange earn a foreign currency account. It is for exporters, professionals who earn in foreign currency. RFC account. It is basically for returning Indians, those NRIs who want to keep their foreign earnings in foreign currency. RFCD account for resident Indians who get foreign currency legally and want to keep it in India. Last but not the least, DD account, diamond dollar account. It is especially for diamond traders. So, foreign currency denominations account in India. Resident can also hold foreign currency accounts abroad. Keep that in mind, but only for specific purposes, right? Uh, with respect to foreign currency accounts in India, these accounts can be savings, current, or term deposits if they are held by individuals. Then current or term deposit for companies or firms, and they can be in single name or joint name, but among only among eligible persons. If the account holder dies, what happened in that case? So if the nominee is living abroad, their share can be sent abroad directly. If the nominee is in India and want to send money abroad to clear the deceased person's due, RBI approval is needed. And if the account was outside India, the resident nominee must close the account and bring the money to India. Now let's move on to our specific accounts. We'll start with EEFC account. So exchange earner foreign currency account. This is most common type and it is mainly for people living in India who earns in foreign currencies like exporters, freelancers, consultant, IT service providers, startups with foreign clients, so on and so forth. Now, what are the permitted credits? What money can be deposited? So, 100% of the foreign exchange earnings received through the banking system are permitted to be credited. Advance payment for goods and services from foreign clients, consulting fees, honorariums, lecture payments received from abroad, unutilized foreign currency withdrawn earlier, and if it is returned, it can be credited to the account. If any repayment of trade loan by the importer to the exporter is done, it is a permissible credit. Disinvestment proceeds and foreign earnings by Indian startup or their overseas branches. So these are the permissible credits. What are the permissible debits? Foreign payments can be done for business, investment, or personal expense. Payment to special economic units in foreign currency. Custom duty can be paid under export-import policies. Loan to importer, customer abroad uh, can happen through this account. And payment to resident in India if they agree to be paid in foreign currency. For example, paying airline ticket or hotel bill in foreign currency to an Indian travel agency. It is permitted. Now, there are some important rules, some important key conditions. If the person withdraws in rupee, it is permissible. But once the amount is withdrawn, you cannot put it back in this account. So it is not recreditable. This account is meant for business transactions. Um, Hence, no interest will be earned on this account, no interest will be paid on this account. Insurance claims paid in rupees cannot be credited into this account, and no loan can be taken using this account as security. Also, a person can use it to repay export packing credit loans, which is taken in any currency. Now, let's move on to RFC accounts, resident foreign currency accounts. An RFC account is a bank account in India that a resident Indian can open with foreign currency. This account is maintained with a bank that is authorized by RBI. Well, authorized dealer banks, we have learned about it in the previous unit as well. What are the permissible credits? So, a person can deposit foreign exchange into an RFC account if he or she has received a pension, retirement benefit, or any other money from job abroad. If he or she brings money from assets owned as an NRI, or if inherited or received as a gift from someone who lived outside India. If a foreign asset is held before 8th of July 1947 or earned income from them with RBI's permission, then it is permissible to be credited. And if the person received foreign exchange from an Indian insurance company as a part of life insurance claim or maturity amount, and the money settled in foreign currency, then it is permissible to be credited. What is a permissible debit? So the person can use the money freely outside India or convert it into Indian rupees and use it in India. Because the currency has been earned while he was working in abroad. Now again, there are some other conditions. Uh, that is, the person can add a resident relative as a joint holder, but only on former or survivor basis. And if the person had an NRE or FCNRB account as an NRI and then returned to India, the balance can be transferred to RFC account. RFCD account, resident foreign currency domestic account. This is another type of account for resident Indians to keep foreign currency in India. What are the permissible credits? So, suppose you have an RFCD account and you can want to deposit foreign currency. So, you can deposit foreign currency into RFC account if you got money in foreign currency while traveling abroad and the payment was not related to any business or work in India, or you have received honorarium or gift from a foreigner visiting India. For example, a tourist from the UK gave you $200 as a thank you. Uh, so you can deposit this amount, or you got a gift or honorarium while visiting abroad. So a family member gave you dollars during your USA visit, or you got a gift from a relative in foreign currency, or you had some unspent foreign currency from your foreign trip which you had purchased from the bank. You can deposit it into RFCD account, or you sold your shares and received money in foreign currency by converting them into ADRs or GDRs, or you receive insurance proceeds in foreign currency from an Indian insurance company. So in these all scenarios, credits can be made. What is a permissible debit? So you can use this money for any permitted current or capital account transaction. Current account like paying for education, travel, or capital account which alters the asset and liabilities. So like investing in foreign shares or property or buying the property. If you buy property abroad, it is a capital account transaction. So you can use this money for any permitted current or capital account transaction. Diamond dollar account. This account is specifically meant for businesses in a diamond industry that meet certain rules under foreign trade policy of the government of India. It is a non-interest bearing current account because meant for businesses. That's why current account, and if it is a current account, it is non-interest bearing. What are the main features of DDA? So you can credit this account with money from exports or local sales. of rough cut or polished diamonds. Foreign currency loans like pre-shipment or post-shipment finance permissible can be credited into the account. When we say what is permissible debit, then it is for uh, trade in diamond. So you can buy diamond, rough cut or polished diamonds, or you can transfer funds to a rupee account. Now, there are some other conditions for foreign currency accounts. For EFC, RFCD, and DD account, when a person earns foreign currency like dollars or euros and deposit it into an EFC, RFCD, or DD account, they must convert the unused amount into Indian rupees by the end of the next calendar month. However, before converting, they can use the foreign currency for approved uses like imports or payment abroad. For EFC and RFCD accounts, if the account holder becomes a non-resident, then the balance in their EFC or RFCD account can be transferred to an NRE or FCNRB account, which are meant for non-residents. Let's understand now some specific categories permitted to maintain foreign currency. Number one, these are agent of foreign shipping or airline companies. So Indian agents can keep a foreign currency account to manage local expenses of their foreign shipping or airline company. They can deposit freight or ticket collections in India or remittances from their foreign principal. Ship manning agencies or managing agencies. So these agencies manage ship crews on behalf of foreign currencies. They can hold non-interest earning foreign currency accounts. Uh, so only inward remittances from the foreign ship owners are allowed to be credited into these accounts. And with respect to debits, expenses for crew management are valid debits. And no loan or overdraft is allowed using this account. No EFC benefit on funds received. A banks must maintain certain reserves, and the account is valid only for the duration of the agreement. Project offices of foreign companies. So, foreign companies setting up a project office in India can open one or more non-interest earning foreign currency accounts. If RBI and project authority have given the approvals, the project contract specifies foreign currency payments, and only one account per project is allowed. Project related expenses can be debited, and funds from the parent company, project authority, or international agencies can be credited. Accounts have to be closed after project ends, and transfer between projects are permissible only after the permission of RBI. If any dispute arises, the balance is converted into Indian rupees and it is kept into a special account. Organizer of international conferences. So these are temporary accounts. They can be opened for temporary foreign currency accounts. Organizers of international seminars. Registration fees, sponsorships, donations are can be credited. Travel, stay, honorarium for foreign guests, refund to delegates, bank charges. So these are permissible debits. Any other transaction needs RBI approval and account must be closed after the event ends. Exporter on deferred payment terms. So exporter supplying goods or services with payment to be received later to be deferred can open a foreign currency account only if they have approval from the project or export or they follow the approval condition. For example, an Indian firm building a power plant in Africa can, under a 2-year payment plan, can open this account to receive future payments in foreign currencies. Units in special economic zones. Uh, Special economic zone units can hold foreign currency accounts in India to receive all foreign exchange earnings, and it can use these accounts for business transaction with Indian or foreign entities. Foreign exchange deposits cannot be, you cannot deposit foreign exchange purchase using INR, and you cannot use balance for gifts or loans to non-special economic zone residents. Indian companies with FDI, if a company gets foreign direct investment and has upcoming foreign currency expenses, it can open a temporary foreign currency account But again, it must close the account within 6 months or when the expense is done, whichever is earlier. Reinsurance or insurance broker. Uh, Reinsurance and composite insurance brokers which are registered with IRDA, they can open non-interest bearing foreign currency account for regular business dealings. Foreign currency account denominated accounts outside India. So the Reserve Bank of India allows Indian resident to keep a foreign currency account with a bank outside India only for a specific purposes, like for business use. So Indian companies or professionals can keep a foreign currency account abroad for doing regular business, like exporting or opening a branch. For study abroad, if you are studying abroad, you can open and maintain a foreign currency account during your stay. For example, if Rahul goes to UK for his MBA, he opens a bank account there in British pounds to pay for his expenses. And after his studies, this account is treated under LRS rules. Foreign visits. So if someone is visiting a foreign country, they can hold a foreign currency account during their stay. But once they return, they must bring back the remaining money to India. For exhibitions or trade fairs, if an Indian company is participating in a trade fair abroad, it can open a foreign currency account to deposit money earned from the sales. Resident in India can use foreign currency account to send money abroad under LRS. And if company raises money through external commercial borrowings or instruments like GDR, ADR, it can maintain an account to receive those funds. If an Indian startup has a branch or subsidiary outside India, it can maintain a foreign account to deposit earnings from sales or export during bench abroad. Business entities eligible, so business related accounts who can open, so these specific persons or organizations are allowed to open and use foreign currency accounts. uh, Authorized dealers with branches abroad, Indian banks with overseas branches, Indian shipping or airline companies like Air India or Shipping Corporation of India, insurance or reinsurance companies registered in India, Indian companies having foreign office or branches, or exporters, especially those dealing with projects like construction or engineering, where payment come in phases. Temporary visitors. So the people working in India temporarily can maintain a foreign currency account abroad to receive salaries. A, a foreign national on deputation to the Indian branch of a foreign company, a foreign national working for an Indian company, or an Indian citizen deputed to the Indian branch of a foreign company, so they can maintain an account outside India, temporary who are working in India temporarily to receive the salaries. Remittance of assets by foreign nationals. So foreign nationals can send money or asset out of India, but again under certain conditions, like they are retired from their Indian-based employment, they can send their savings. They have inherited property or asset from someone who is covered under FEMA laws, a widow or widower who inherited from their Indian spouse, or a foreign student who completes education in India can remit his savings. Acquiring property outside India by residents. So a person living in India can legally own property abroad by if the property is owned earlier or it has been inherited. If someone already had property abroad before becoming Indian citizen or received it by inheritance, they can continue to hold it. Or if a person has received gift, then a person can receive the property abroad as gift or inheritance from someone who was living outside India, or from a resident Indian who bought such property before 8th of July 1947, or from another Indian who bought the property as per FEMA rules. And a resident can also purchase, right? So a resident Indian can purchase property abroad using money from RFC account or under LRS, or he or she can jointly own the property with a relative abroad. So a person can buy property jointly with a relative who lives outside India as long as no money goes out from India for the purchase. For example, if Anita's brother lived in Canada, he buys a house there and includes Anita's name too, but the entire payment is made by Anita's brother. And this is allowed. Money should not go from India, right? Foreign Contribution Regulation Act (FCRA). So the Foreign Contribution Regulation Act is a law that controls how foreign money and help called foreign contributions can be received and used in India. It is especially important for NGOs, media houses, political parties, public servants, and this law came into effect on 1st of May 2011. It replaced the earlier 1976 Act, and it ensures that foreign funds are not misused in India and are only used for genuine causes. So let's understand what is a foreign contribution. A foreign contribution means any donation or gift given by a foreign source. So this can be money, any article or object, except for personal gifts like wristwatch and a certain value, or this can be a share or security. So we say that foreign contribution means any donation or gift given by a foreign source. So what is a foreign source? A foreign source includes foreign government or their department, foreign companies, foreign citizens, foreign trusts, NGOs, foreign clubs, or international organization, except uh, a few like UN or World Bank. So they will be considered as foreign sources. So who cannot receive foreign contribution? FCRA strictly prohibits some persons and groups from accepting foreign contributions, like persons contesting for elections, media persons like reporters, editors, cartoonists, publishers, government servants, judges, public servants, MPs, member of state assemblies, political parties and their leaders, politically active organizations, owners or editors of news companies or companies or associations that make or broadcast news or current affairs. So these uh, people and groups are prohibited from receiving any foreign contribution. Foreign hospitality means getting free stay, free travel, free food, or medical treatment in another country paid by a foreign source. And this is not allowed without government permission for MPs, MLAs, leader of political party, judges, government servants, employees of government control organization. So they cannot receive any foreign hospitality without government permission. If government permits, they can enjoy that foreign hospitality as well. Then this restriction on foreign hospitality. So all of them have to be take central government's permission if they want to accept the hospitality. The reason is to avoid foreign influence of people in important position. This is all. So restriction on transfer of foreign contributions. So can foreign contributions be transferred to others? So answer is simple no. A person or organization that is allowed to receive foreign contributions cannot give it to another person unless the other person has also has approval under FCRA. Requirement for accepting foreign contributions. So, when any person or organization in India wants to accept money or donation from a foreign country uh, or foreign source, certain rules must be followed under FCRA. Number one, if a person or an organization is involved in cultural, economic, educational, religious, or social work and they want to accept foreign donations, they must get registered. Uh, they must apply and get registration certificate from the central government. Or if they are not registered, they can still accept a foreign donation, but only after getting prior permission from the central government. And this permission is only for specific amount, for a specific donor, and for a specific purpose. This registration is valid for 5 years and it must be renewed within 6 months before expiry. And prior permission is valid only for that specific donation and purpose. Suspension or cancellation of registration. So the central government can suspend or cancel the FCRA registration of an organization if they break the rules or misuse the funds. So what happens if registration is suspended? The organization cannot receive new foreign funds unless they get special permission for a specific donation, and the organization uh, can use existing fund in their account only with prior approval and in a specific manner. Uh, Also, if government thinks that the organization has violated the FCRA rules, it can issue the order stating that they cannot receive any foreign currency rules. They cannot receive any foreign currency, and uh, they cannot spend any unspent foreign funds without the central government's permission. Just a minute, yes. Now let's understand where to receive foreign contributions. So from September 2020, there's a new system to receive foreign funds. Number one, you have to open an FCRA account in SBI New Delhi main branch. All foreign contributions must first come into this account only. Then you can transfer to other FCRA account from that SBI FCRA account. The organization can transfer funds to another FCRA account in any other scheduled bank for keeping or spending. And the organization can open more bank accounts in scheduled banks to use the funds for different projects, and these accounts must be used only for foreign contributions, so no local funds should be deposited here. The SBI New Delhi branch or any other scheduled bank where the FCRA account exists must report the uh, certain things to the government, like the amount of foreign contribution received, the source, the method, like how it was received, wire transfer or check. And every person or organization who receive foreign contribution must inform the government by submitting a statement showing the amount of each donation, the source, the mode of receipt, the purpose for which it was used, and the manner of utilization. Also, they must submit a bank certified copy of the statement confirming the receipt of foreign contribution along with the intimation to the central government. Prohibition and restriction on transfers utilization. So, if a person or organization get money from a foreign source and they are registered under FCRA or have prior permission from the government, they cannot transfer this money to someone else unless that other person is also registered or has prior permission under FCRA. And the FCRA allows the FCRA lays down rules for using the foreign contributions. So, if the money was received to build the school, you cannot use it to buy office furniture. So you have to use only for the purpose for which it was received. And no speculative activities allowed. You cannot invest the money into stock market, cryptocurrencies, FNOs, uh, betting activities to make profits. And the administrative expenses should be limited. So the money spent on office rent, salaries, electricity must be within the prescribed limit by the government. So this current capping of 20% unless special approval is taken from the government. Rules under FCRA and reporting by banks. So any person or organization receiving foreign funds under FCRA must do two important disclosures. Number one, annual disclosures, and number two, quarterly disclosures. With respect to annual disclosures, they must upload audited accounts including income and expenditure statement, balance sheet, receipt and payments for the financial year by 31st December. That is within 9 months after the end of the financial year. And with respect to quarterly disclosures, for each quarter, the detail of money received must be uploaded within 15 days after the quarter ends. And details must include name of the donor, amount received, and date of the receipt. Unutilized foreign contribution. If a person or NGO FCR's registration is cancelled and they still have foreign funds lying in the FCRA bank account, they cannot use or touch that money anymore. The bank will hold that money until the government tells them what to do. Even if that money was already transferred to someone else before cancellation, the same rules apply. and that person cannot use the money until the government gives the permission. Bank reporting. So bank also have duties under FCRA. Bank must report to the government within 48 hours of any foreign contribution received by anyone, even if that person is not registered under FCRA. Every single receipt must be reported. There is no minimum limit. And a special online software has been made by the Ministry of Home Affairs for this purpose. Bank must use this system to send the reports. Now let's check your progress. Foreign currency denominated account in India cannot be in the form of, it can be in savings account, fixed deposit, current account. It cannot be in the form of RD. So D is the correct answer for this question. Foreign currency denominated account cannot be maintained in India by, it can be maintained by shipping mining agencies, it can be maintained by Indian company receiving FDI, composite insurance broker. So C is the correct answer. Exporter exporting against advance payments. Foreign currency account outside India can be opened by any individual in India. So answer is true. They can open. A person on temporary visit abroad cannot open a foreign currency account there. A person on temporary visit can open. Hence, this statement is false, making A as the correct answer. Now, let's do some more practice questions. Consider the following statement regarding foreign currency denominated accounts in India. An individual can open foreign currency denominated account as a current savings or term deposit account unless otherwise specified. Correct. A resident nominee can freely remit their inherited shares from such account without any regulated approval. No, this is not correct. A resident nominee of a foreign account held outside India under FEMA must close the account and repatriate the proceeds to India. This is correct. So, option C, only 1 and 3 is the correct answer. Consider the following statements regarding EFC account. EFC account can be credited with 100% of the foreign exchange earning received through normal banking channels. Correct. The account holder is allowed to earn interest. This is non-interest bearing account. So this statement is not correct. Payments in foreign exchange to a resident Indian for services like hotel expenditure can be debited from EFC account. Yes, it can. To correct. Unutilized foreign currency earlier withdrawn from the account can be recredited. Foreign currency allowed. Funds from EFC account can be used to repay packing credit advance in any currency up to actual exports made. Correct. Rupee withdrawn from EFC account can be recredited. It cannot be recredited. So this statement is not correct. So 1 is correct, 3 is correct, 4 is correct, 5 is correct. 1, 3, 4, 5. Option C is the correct answer for this question. Consider the following statement regarding RFC account. An RFC account can be opened by a person resident in India from foreign exchange received as pension from an overseas employer. This statement is correct. A resident relative can be made joint holder with operational rights during the lifetime of RFC account holder. So it can be only on a former survival basis. That's why this statement is not correct. RFC account can be credited with foreign exchange proceeds from asset inherited from a person resident outside India. So this statement is correct. Balance in NRE or FCNR account can be transferred to RFC account upon change in residential status to resident. So this statement is also correct. RFC account balances cannot be used outside India. So this statement is not correct. Balance in RFC account can be utilized outside India. So 1, 3 and 4 are correct, making option A as the correct answer for this question. Consider the following statement regarding RFC-D account. Foreign exchange received as honorarium during a visit abroad can be credited. Yes. RS cannot be opened by any person residing outside India. So can be opened by any person residing outside India. No, resident individuals are allowed to open this account. Balance in an RFC-D account can be used for both current and capital account transaction permitted under FEMA. This statement is also correct. 1 and 3 is correct. So option C is the correct answer for this question. As per RBI's condition, the sum total of accruals in DD, EFC, RFCD account during a calendar month must be converted into rupees on or before the 15th of next month, on or before the last day of the succeeding calendar month. So this is correct. After 19 days, or 90 days, or after 6 months. So the accruals in these accounts should be converted by end of the next calendar month. So B is the correct answer for this question. Consider the following statements regarding foreign currency accounts maintained by various entities in India. Indian agents of foreign airline companies can receive credits from their overseas principal and from freight collection in India. So this statement is correct. Ship manning agencies are allowed to earn interest. No, they are not allowed to earn interest. So this statement is not correct. Project office of foreign companies can open more than one foreign currency account for a single project. No, one foreign currency account per project is allowed. Funds in the ship manning agency's account can be used for expenses related to crew management. So this is correct. Upon completion of project, the project office foreign currency account must be closed. Also correct. So 1, 4, and 5 are correct, making option D as the correct answer for this question. Consider the following statement regarding related to permitted foreign currency account and remittances. A resident Indian can maintain a foreign currency account abroad for studies during their stay and continue to hold it permanently after returning to India. So no, this is not correct. An Indian company can open a foreign currency account abroad for its overseas branch. Yes, it can. So this is correct. A foreign citizen employed in India can hold a foreign currency account outside India to receive their salary payable in India. This statement is also correct. A foreign student who completes study in India can remit their asset outside India. Yes, they can. A resident Indian can acquire immovable property abroad using foreign exchange in RFC account or under LR. The statement is also correct. A person visiting abroad temporarily can retain the balance in their foreign account even after returning to India. No, they must repatriate after returning to India. That's why the statement is not correct. 2, 3, 4, and 5 is correct. So option C is correct answer for this question. Which of the following statements are true with respect to Foreign Contribution Regulation Act 2010? The FCRA 2010 replaced the earlier FCRA 1976 on 1st May 2011. So this statement is correct. Foreign contribution includes articles of personal gift regardless of their market value. So no, this statement is not correct. Foreign contribution does not include article of personal gift if the market value is below the specified limit. A judge must seek prior permission from the central government before accepting foreign hospitality. Yes, this statement is also correct. A registered organization can freely transfer foreign contribution to another registered organization. So, the act actually prohibits transfer contributions to any other person. So, free transfers are not allowed, hence not correct. Foreign hospitality includes offer made in kind covering travel, lodging, or medical treatment for foreign sources. Yes, this statement is correct. So 1, 3, and 5 are correct, making option A as the correct answer for this question. Which of the following statements are true regarding the acceptance and utilization of foreign contribution under HCRA? Any person with a definite cultural, economic, education, religious, or social program can accept foreign contribution only after registration with central government. Yes, in absence of registration, prior permission from the central government must be obtained for each contribution which is valid for a specific source and purpose. Also correct. So this is correct. This is correct. Registration certificate once granted is valid for it is for 5 years, not 10 years. So this statement is not correct. Upon suspension of registration, the person can freely receive and utilize foreign contribution without any restriction. So no, this is also not correct. Foreign contribution must be received only in FCRA designated account at the New Delhi main branch of the SBI. So this statement is correct. Foreign contributions may be transferred to multiple accounts in scheduled bank for utilization provided they are opened for that specific purpose. Yes, this statement is correct. Every person receiving foreign contribution must submit details of the source, amount, purpose, utilization of central government certified by bank. Yes, this statement is also correct. So 1, 2, 5, 6, and 7. 1, 2, 5, 6, and 7. Yes, option D. Option D is the correct answer for this question. Consider the following statements regarding FCRA rules and reporting obligation. The audited statement of account must be placed on the official website within 6 months of the financial year closures. It is 9 months, not 6 months. So this statement is not correct. Details of foreign contribution received in quarter must be uploaded within 15 days of the end of quarter. Yes, this statement is correct. Unutilized foreign contribution, the account of person whose FCR registration has been cancelled shall remain with the bank until further government direction. Yes, this statement is correct. Bank must report foreign contribution received only if the person is registered under FCRA. No, bank must report every foreign contribution transaction. So this statement is not correct. Reporting by bank should be done online through software developed by Ministry of Home Affairs. Yes, this statement is correct. So 2, 3, and 5 are correct. Option A is correct answer for this question. Thank you for watching this video. If you have any doubts, please don't hesitate to ask us on our Telegram group channel JIIB CIB Prep. We'll meet again with unit number 11. Till then, please take care and do revise your units.